Hello, is this the bank? Yeah. I need to buy 5 houses. 5. With Altcoin. I have 2.5 million Altcoin.
Yeah.
What do you think this is? Of course you're gonna take it. This is massive, huge, monumental news. After significant studying and in keeping with President Trump's vision to make the United States the capital of the world, crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrencies as an asset for a mortgage. This is signed, sealed, and delivered. Any project that is on Coinbase can now be used to buy mortgages. This is, you could literally use Altcoin to buy an entire house. If you have 500,000, 500, which if you was on my show, I was talking about it when it was pennies, you could have been able to buy a house right now. In light of the recent news, Altcoin has skyrocketed to 50. I was very extremely early to this coin, and it looks like it might actually supersede Dogecoin. I don't really like meme coins, but it so happened that I chose the best performing meme coin ever. One of the best ever. And I found it at, I think 2 million market cap, and it went to 2 billion. And then I told you to buy at 300 million, and then it went up to 2 billion. I've only had one meme coin, and that was Altcoin. And Altcoin was actually an AI coin. It was birthed through an AI coin, through Galtius Maximus, and then it just went viral. I want to dispel some myths before I really get into the meat and bones. This is going to be a long episode, yeah? Before I get into the meat and bones, guys, M2 Supply. I told you many times on my channel, many times, this is bullshit. Sorry about my French, but this is a lie, categoric lie. Anyone that listens to this is a retard. I'm sorry, I have to say it. It's the truth. Anyone that believes this is stupid. I'll tell you why. This gentleman right here, he's an expert. You didn't believe me when I was speaking about it. You didn't, but this guy right here will explain everything. So sit back, relax. And this is why. He has a PhD in MIT. He's a Bitcoin intelligence platform. He has his own models, everything. But listen, just listen.
Raoul Pal has found this close correlation between global M2 and Bitcoin, and the model seems to be predicting Bitcoin perfectly. And if that's true, this should help us predict Bitcoin future. Today, I'm going to talk about this model and see if it's worth anything. Okay, so let's get started. First things first, this is his model, global M2 with 12 weeks of lead, meaning pulling forward, is correlating with Bitcoin very closely. Can we use this to predict Bitcoin? Let's see. I also noticed he has another chart a while later that he actually uses 10 weeks, and this is already something you got to be careful with. When people try something and it doesn't work, they switch and change, and they could just never be wrong if they can indefinitely play with the model. But that's the least of our concerns. What I'm going to talk about today is a huge amount of data illiteracy, right? And the reason I'm really, riled up about it is I teach this stuff in the undergrad and grad level, and what I'm seeing is doesn't even pass the first month of first data analytics class. This is a terrible failure of not understanding overfitting, and not everyone is an expert in data analytics, so it's expected to misguide a lot of people. I also see other analysts that kind of do the same things, just play with some other parameters. This is an example. This person is actually copying another person's analytics. So the person who came up, this is Colin Talks Crypto, and they are finding another kind of match between the two time series, and noticed how closely they expect this to predict Bitcoin, and like even a little bit of optic they expect to predict Bitcoin. So like every little up and down, they try to say this predicts Bitcoin. Now, why do I think this is a terrible illiteracy? All right, so let's see. This is global M2. And first of all, I will quickly mention that the whole measure is very dubious, very problematic, because the way they measure it is they get central bank data, they multiply by the currency, exchange rate, and this is mixing a lot of good and bad and lagged and old and recent data. The US is reporting very frequently. Other countries are reporting with a lag, sometimes at least a week, sometimes a month, sometimes 2 months. And this measure is kind of ignoring all that and mixing it all together and pretending to produce a daily value. The only reason this is actually fluctuating on a daily basis is because every M2 that you get from the central bank data, you have to multiply by the currency exchange rate. As the exchange rate fluctuates, this metric also fluctuates. So again, it seems to be moving on a daily basis, but it's actually already very lagged and really is mixing frequent and infrequent updates. Anyway, so that aside, that's probably the least of our concern. The bigger issue is like if you match 2 time series like this, the first thing that comes to my mind is you've got zero training in data analytics because you are unaware of the risk you're taking and the obvious overfitting that you're causing, right? If I'm giving these 2 time series, I can play with them however I want to create whatever correlation I can find. So for example, let's say I have a case for a zero offset. So there is no change in timing. I'm not leading, I'm not lagging, right? I can just zoom in on one part of the data like this. And if I'm allowed to play with the data and arbitrarily move things around, I can definitely find great match between pockets of data. One example is just what happened recently since April, right? If I zoom in, I mean, the 2 time series actually don't look very much aligned when you look at the shorter term or medium term volatility. Over the long run, they absolutely are correlated. Of course, more liquidity means a higher price for Bitcoin. So, but if you look at shorter term predictions, that's where you get pretty much nothing. Again, let's look at it in close period, a recent period. If I look at data from April, wow, look at that. The two are actually closely matching. Very well done. This is a great model. So I found it. But the moment you actually zoom out, you realize, nope, actually, there are times where this goes down, that goes up, and some negative correlation, then positive correlation. What the hell is going on? And then as an untrained guy gets confused with this, then they try to try different things. So let's look at the scaling, move things up and down or left or right. And what they'll try to do is, add some lead. Let's actually add 50 days of lead and see what happens. Oh, actually, maybe this top is a little bit behind that. So let's move it forward further. Let's do 80. Why not? Look at that. The tops are aligning, the bottoms are aligning, but the rest isn't. Maybe I can just drop them out. And it's getting better. But not exactly as I want. Actually, Bitcoin up and down is a little bit bigger. So maybe I can play with the scales. What if I do that? And then what if I do this? Oh, wow. Look at that. I'm the analyst, guys. I found the perfect model. I cracked Bitcoin. Definitely up, moving forward. And that's a fantastic model. But again, the moment you go back, you see the correlation breaks. This is called overfitting. You push, you torture the data and the time series to match only on the data you have. But because you don't have a model, actually, you don't have a proper systematic relationship that you found, you fail to predict the future, right? And in fact, if you look at the 2 time series, as I said, if you actually understand what you're doing, you realize that the metric you're using is actually a little bit lagged. So it is possible that Bitcoin is moving first and liquidity data is moving next. If I remove the lag, I can actually see that in the last cycle, Bitcoin topped first and liquidity topped after that. And if I actually add a further lag to the M2 and I pull it back to align these tops, I can see that Bitcoin topped 145 days later, liquidity topped, and they both came down together. The end of the violent crash actually coincides with the end of the this metric's drawdown, and it actually seems to improve the fit a little bit if you look at it like that. And I can even, like, again, use the same trick, play with the zoom, and voila, I got something. And use the same thing and play with the zooms, and yes, I got it, guys. I have the perfect model. So now Bitcoin is leading liquidity. We can predict liquidity using Bitcoin. But that's not super exciting because we want to pretend that we have predictive power for Bitcoin. So instead, we will play with some leads. You can try a lead of 80 days, okay? And that doesn't look good overall. Some ups and downs are matching, but again, just to make it look better, I can play with the zoom and eliminate. Oh, look at that. Look at this beauty. We got the perfect model, guys. So 80 days is what we want. But of course, this guy will keep predicting the future with a bad model. So as new data comes in, the two actually begin to diverge, right? So then he realizes, oops, maybe this wasn't a good parameter. So let's actually switch to 90, switch to 100, maybe 108. This is his last value. So 108 actually is now aligning this top with that top. So if I again play with the zoom a little bit, I can pretend that this is still matching. The moment I saw any piece of this, I was like, this is a definite overfitting. This is all illiteracy again. There's no other way I can explain it. And now let's learn a little bit about overfitting. Use the opportunity. This is what we call overfitting. If you have a classification problem, for example, you want to separate the red from the green. The boundary is kind of a curve, right? So if you use a line to separate the two, the line just can't do it. You need a curve. So the line is too simple. It's underfitting. If you use a curve that's properly made, it will do the job. It's finding a real relationship. But if you use a curve that's too curvy, it will overfit and it will overly match all these little ups and downs. This might look better, but the problem is a lot of the ups and downs that we're modeling here are actually noise. When you're modeling noise, next time you'll be terribly surprised. That's why we see Raoul Pal is changing the weak numbers because they match on historical data, and moving forward, it doesn't work. So they have to play with it so the chart follows the future data as much as possible. Here's a better example of how overfitting works. You have a real relationship that's a sine wave, but data is always noisy. So you get some points up, some points down. If you have the right model, it will only focus on the real systematic relationship and it will ignore the noise, right? Of course, a simplistic line can't do it. And also an overly flexible line cannot do it, and it will overfit. This is where again, an untrained guy with access to some charting tool will try to connect all these dots and pretend that their model is fantastic in explaining the data. But because this is noise and you're modeling noise, next time you get more data, this downward deviation will actually be upward deviation. The only thing that repeats is the systematic sine wave. All the ups and downs will not repeat in future. They actually realize in different ways. So your overly complex model will actually be doing way worse than the good model example that I'm showing in here. So you have to be very careful with overfitting. A problem with that is it looks better, right? It looks matching. Again, goes back to this. Looks a lot of matching fluctuations. But because it's force fit, right? It's forcibly fit on historical data. You have no idea about the predictive accuracy of this thing, right? So be careful out there. There's a lot of bad analytics that might confuse you and waste your time, really. And I think at Bitcoin Intelligence, this is our responsibility to bring you the best and the most accurate analysis. All right, take care. I'll see you in the next video.
I want to give this man a round of applause. I was saying it for a long time, but I'm just some random guy on the internet. This guy holds a PhD, MIT, everything, all the good stuff. I want to teach you something else about models. Check this. This is a famous saying. All models are wrong, but some are useful, by George E.P. Box. George P. Box has been called one of the greatest statistical minds of the 21st century. He was famous for this quote, all models are wrong, but some are useful. And one of my favorites, models are to markets what maps are to territories. Helpful, but don't drive off a cliff because Google said turn right. This goes with every single model. Pi cycle indicator top, MVRVP, and the list goes on and on and on. Imagine I'm having a party and I invite 100 of the subscribers to a big party. You, me, the whole crowd, we're all celebrating. We have Altcoin season. Some of our favorite coins have 100x, 200x, 500x. Hopefully. In this party, I need beverages. I don't drink alcohol, so it's 100 drinks of non-alcoholic beverage. Each beverage costs £1, $1 a pound, or euros. How much will 100 drinks cost? You said 100. That's incorrect. The real answer is actually 80. Why? Because we have something called economics of scale. The more you buy, the cheaper the product. What if, for example, it's late night, there's only one last store open, it's very, very late, and I walk in and I speak to the person. I say, listen, I need 100 beverages. He replies back and says, Mister, sir, I can't sell you all 100. I only have 100 left. I can only sell you maximum 10. But if you do want 100 of these beverages, it's going to cost you £2. So the answer is 200. The answer is never ever linear, but every model is linear. With maths, they condense 300 pages of work, 400 pages of work to a single line of equation because the main thing is it's linear. We got some more breaking news. Oh my God, it's done. Can't believe it.
A few months ago, the press was saying, do you really have anybody of any interest? Well, we just signed with China yesterday, right? Just signed with China. We have everybody. We're not going to make deals with everybody. Some we're just going to send them a letter, say, thank you very much. You're going to pay 25, 35, 45%. That's the easy way to do it. And my people don't want to do it that way. They want to do some of it, but they want to make more deals than I would do. But we're having some great deals. We have one coming up, maybe with India, very big one, where we're going to open up India. In the China deal, we're starting to open up China, things that never really could have happened. A few months ago, the press was saying,
you see that Indian guy? He was happy. He's like, yes, India have a deal. It's confirmed now. Scott Bassent says he thinks a trade with China could be wrapped up by Labor Day. We have altcoin season and it's trending 100,000 views. Wow. For the 1 millionth time, altcoin season. I did say even on my previous episode that Bitcoin dominance has peaked and they're going to all start screaming. Everyone. I think it's just a paid shill. They're definitely getting paid. These people are definitely getting. It's like they get all of these key opinion leaders just to trap even more folks, make them believe that we have altcoin season and then dumping them again. If you've been here for a very long time on my channel, anytime you hear this word, just short it, my friends. It'll make life 10 times more easier. However, I'm not a bear. Don't worry. I will tell you where the bottom is. I'm going to give you some alpha as well. Don't worry. Okay, Coinbase. Coinbase is making all-time new highs. I did say on my channel long time ago during the very, very lows. And now look at Coinbase. Coinbase sells picks and shovels. Still a buy in my opinion. Many people think that this is far gone. You really don't know the power of markets. Yes, you missed a 10x. There might be another 10, 20, 50x. And you're going to still look at it and say, I'm too late. I missed the 50x. I'm too late, guys. Like, when are you going to actually consider some of these stocks, these crypto proxy stocks? The biggest traders on hyperliquid sitting at around 200 million market cap is currently shorting. Second is longing, and then the rest is all shorting Bitcoin and ETH. If you want to listen to the noise, go ahead. If you want to listen to the news, go ahead. If you want to listen to the media, go ahead. If you want to listen to X, go ahead. But the biggest players actually control the market. And most of them are shorting Bitcoin. We have the biggest liquidations sitting at 108. That's the biggest liquidations for the daily. For the past 30 days, the biggest liquidations is sitting at 110. Will market makers push the price to 110? Fear and greed is currently at 49. We're at neutral. Some other pages are saying that we're at 73. So it's kind of mixed at the moment. Some are saying we are extreme greed. Some are saying that we're neutral. But I think we're closer to greed than we are to neutral. Some honorable mentions. The health of the market is not looking good. GDP has actually gone down. US initials and continuing jobless claims continue to go up. That's a bad sign. Unemployment is heading higher. It's broken this area of consolidation and continues to go up higher and higher. And the most frightening number is true inflation. Inflation is actually heading higher. Maybe, just maybe, Bitcoin is a leading indicator of what's to come. The US dollar is down by 10%. Crypto hasn't benefited at all by this demise of the dollar. This is Nick, the right-hand man of the Fed. President Trump's exasperations over the Federal Reserve take its slow approach to cutting interest rates is prompting him to consider accelerating. Not only will he cut, Morgan Stanley expects the US to deliver 7 rate cuts in 2026. As for the meantime, unfortunately, there's only 2 rate cuts, and that's probably a lie. We're probably not going to get no rate cut. Zero. Whatever they're anticipating, whatever they're talking about is just a lie. We heard this throughout the whole year. They didn't even cut once. So most likely, sorry to say this, unfortunately, the Fed is not cutting. He's not cutting. Interest rates continue to go up higher. He is not cutting. He is not going to cut a single interest rate. I hate to say it, but what do you want me to say? Fight the Fed? You want me to fight the Fed? That's rule number 1. Never, ever fight the Fed. Never in your life. They're going to continue to hold and they're not going to stop. If inflation is not under control and it's not being on its best behavior, we're going to have a problem with risk on assets. Ethereum, some good news regarding Ethereum.
Has had first mover advantage. So Bitcoin has had first mover advantage, and it's really got a simple value proposition. It's a store of value. It's digital gold, decentralized digital gold. Ethereum represents the next generation of the internet, evolution of the internet and web protocols. Ethereum is Web 3, the re-decentralization of the World Wide Web. Ethereum's been building layers of enabling infrastructure for nearly a decade, trying to get scalable enough so that we can move applications onto decentralized rails. Builders are coming into the ecosystem now. Enterprises, financial institutions are now comfortable because it's now legal to do blockchain things in the U.S. With the new regime in the SEC and in U.S. government. Ethereum is now scalable enough, it's affordable enough, and it's usable enough so that the best and brightest entrepreneurs are going to be able to build applications of buy-in for the community rather than, as in the traditional economy or in Web 2, in an adversarial nature with their users. So it's going to be a game changer for how the world re-architects its systems.
Time magazine has placed Polymarket at the top 100 most influential companies in 2025. And the main reason for this is Polymarket actually has a 95% accuracy rate. 4 hours before markets resolve, it has 95% accuracy. 12 hours before markets resolve, it has a 90% accuracy rate. 1 day, 1 week, 1 month, 90% accuracy rate. To be honest, this is just options trading, but rebranded as prediction markets. Crypto never really had a prediction market. Crypto is always late to the game. Traditional markets have options, so don't be misled by all of this marketing. Traditional markets for years and years have something called options. Option trading. It's exactly the same. It's just derivatives, but it just it's remarketed to something called prediction markets. Options is just gambling. Prediction markets, gambling. That's all it is. Do you think the price is going to be at such and such date? That's a call and a put. On that day, it's a strike. Same thing. So don't fall for the marketing, please. Guys, wake up. We have Pump.Fund, the most successful app and company in crypto. Then we have Polymarket, one of the most successful apps and company in crypto. What does that say about the landscape? Polymarket nears a 200 million fundraising at a valuation over $1 billion US. Some honorable mentions. We have Airdrops. I know some participants are very, very depressed. They're sad. They lost a lot of money. They want refunds. They don't know who to ask, where to get this refund from. They're very, very, very depressed. Okay. But I'm here to help. You still can make some free money in this space. Okay. There are protocols where you can do yield farming. You can do test nets. You can do perp tradings. You can do yield farmings. You can do genuine reviews. These are actual genuine airdrops that I have actually participated in. And you can actually get free airdrops. So check it out. Number 1 is Kanata. Number 2 is Succinct. Number 3 is Paradex, Turtle Clubhouse, Ethos, and finally Infinite. Some honorable mentions is Swap, and it's up by 7x. Now remember, we're not going to see a typical altcoin season. There's 11 million coins. We're going to see bursts of altcoin season with different coins. This happens in traditional markets as well. Hardly anyone is talking about this. This is a robotics company. It's up a massive 455x in the past 5 years. What? This is crazy. This is crazy numbers. Another company, it's up a massive 700x of a robotic company. So you get different altcoin seasons. Please, can you bookmark this? Yeah, bookmark this. Put this away. You can trade it. You can buy it. There's going to be more and more companies like this in the space. At the end of the day, we're here to buy innovation in the space. We're going to find altcoin season, but it's going to be different pockets. Okay, just like traditional markets, we're going to have different pockets where coins go from 2 million to 2 billion US dollars. And no surprise here, stablecoin super cycle is superseded 252 billion US dollars. This is not going to stop. Even if Bitcoin goes downwards, sideways, this is going to continue to go up and up. I'm extremely bullish with Circle. I think that's going to continue to go up. If Bitcoin goes to 88K, stable coins are going to continue to go up higher. Coins are foolproof, are absolutely foolproof. No matter what happens, if the market goes down, up, sideways, you're winning. Matter of fact, you benefit more in a recession. You benefit more in a downturn. People are scared, frightened. You benefit way more due to volatility. Finally, Bitcoin price. I was right again. Lower high, another lower high, and another lower high. And you know what's crazy? You know what's even more crazy? SPX is making new all-time highs. But Bitcoin's meant to follow SPX, right? It's meant to follow M2 supply. But I don't understand. Why is this happening? I don't get it. I really don't. But it's meant to follow the NASDAQ. Listen, I've been here many, many times. And if you go back to history, I won't show you that anyway. I've been here many, many times. Yeah. And Bitcoin is heading lower. I did say to 88. Now, I don't have a crystal ball, my friends. I don't. But I did definitely tell you that we're not making all-time new highs. Let's say for argument's sake, we make all-time new highs. For argument's sake, yeah. Let's just say market makers want to liquidate me at my short here. It's fine. I laid a little trap for them there, but it's fine. But let's just say, for example, they want to push prices to 113. I want to show you something very, very interesting. We went up, made an up thrust, headed back down, went halfway, came back down, scared some more folks. This was a fake out, and then made all-time new highs. Up thrust, came back down, went halfway, came back down again, fake out, and will we see all-time new highs? Catch some more shorts? Try to wipe me out? Go ahead, I don't mind. I really don't mind. And then we head downwards. Is it gonna play the exact same pattern? This one is a shorter time frame. They look identical. I cannot lie. It looks identical. I've said this many times. I've said we're not going to make an all-time new high during the summer. Seasonality plays a massive part. We also said that we're heading lower. We also said that we're heading to 88K. We also said like how many stuff. I gave you the very, very bottom. I gave you the very, very top. The absolute top. What? We're going to go to 150K, 200K because there's some random guy on the internet showing an M2 supply. Show it. Why is Bitcoin going to go up? Tell me now. Why is Bitcoin heading up high? Why? Yes, We know M2 goes up. We know the S&P 500 goes up. But you know why the S&P 500 goes up? You know why? Because your money is being devalued. House prices, why are they going up? They're not going up because your house is expensive. They're going up because your money's sick. Bitcoin is still just hovering around here. If you are an actual bull and you're looking for higher prices and you're like, yo, this guy, he's lying. He's not being truthful. He's lying. I know we're heading up higher. I know. I just believe it in my bones. Then what you wait for is right over here. You know, this right here, if we bounce on this right here, 106 and some change, then we're good. Okay. Once we come out of this range, then we're good. Now I'll show you on the lower time frame. I'm going to show you in the 4-hour time frame. The bad news is we kissed this area and headed downwards. We're continuing to head downwards. If you're looking for higher prices, what we're looking for is to breach this area. If we breach this area, head over here, we're safe. We formed an all-time new high. Okay, we're safe. If we form a higher high, then we're good. We're good. Bull market continues. We're heading to 150k, continues. But this forming higher lows after more higher lows, another higher low, a lower low, lower low. Come on, guys. Like, what do you want me to say? What do you want me to say? ETH is forming a bar pattern. And as you can see here, we rejected this trend line. Going to head to this area, 2,357. And then head to this major structural area right over here at 2,300. Same thing applies, forming higher lows, forming lower highs, continuation of a lower high, another lower high. And to continue this pattern, we're probably going to form a lower low. Am I being bearish? Am I being too bearish, guys? Let me know. Am I really being too bearish? Am I seeing it wrong? Let me know. Solana, what did I say? It's going to head to this trend line. It kissed my exact trend line. Like picture perfect. Cheese! Picture perfect. If you had long this area right over here, right here, if you long this area, you'll be sitting pretty. You'll be up a massive 17%. This is a technical setup. I like to call it the staircase to hell. We're forming lower highs, lower highs, lower highs, further lower highs, and just a continuation. It's going to continue bleeding and bleeding and bleeding. Do not fight the Fed. My friends, do not fight the Fed. They're not on your team. They want you to lose. This is why 99% of participants actually lose. Only 1% actually come out alive. 1%. I'm not even kidding. I'm not kidding. Only 1% actually win in this game for a reason. Join our private members and I'll help you beat the 99%. Others' dominance is continuing to go down. We have a major structural problem. No surprise here. We never, ever in this bull market have ever seen it go down. Like never. This has never, ever happened. This is like the worst crypto bull run ever. We're making new lows compared to the bear market. I am not kidding. There are some coins that actually make new lows. Even the bear market in 2023, 2022, 2021, 2017, you name it. We never made a new lower low. Right here, ladies and gentlemen, we've made a new lower low. Markets are vicious and cruel. Whenever participants really expect to make life-changing gains, the market rug pulls them. And there are some coins where people never even thought they'll make money, like Altcoin. I was buying that as a joke. And it became the biggest meme coin. So there's a lesson in that. There's honestly a lesson in that, you know? But nonetheless, I think we will see altcoin season, but it's going to be very different. All right, we're going to have ebbs and flows. There's too many coins, guys, way too many coins. And some of these coins don't have enough attention. The only stock coins, whatever it is, there's only one section in the entire space that has garnered attention again and again and again. Even during the World War III scare, it was none other than AI. In the past 4 years, all I've been hearing, AI. And every other narrative comes and goes. It's here for 2 days, here for 2 weeks, here for 1 year. But AI is the only thing, God honest truth, it's the only narrative that just keeps on getting bigger and bigger and staying. It's actually sticky. It's very, very, very sticky. I'm very, very, very bullish on AI coins and AI agents. I think they've got the best narrative. The rest is just, they'll come and go. They'll come and go and whatnot. Let me end with this. This is like the barometer of the entire market. Whenever altcoins head to this area, it means that there's a 0.27% ratio to Bitcoin. Whenever we go to the higher ranges right here, that means there's a 1-to-1 ratio. 0.96 is a 1-to-1 ratio, roughly. For example, Bitcoin gets a 5 trillion market cap. Altcoins in the crypto market is 5 trillion. That's a 1-to-1 ratio. Right now, we're heading all the way down to my next target of 0.26, and maybe even lower, but we're going to have to wait and see. There's going to be a capitulation. This is the summer capitulation. Honestly speaking, this should have been done a long time ago. We should have just planked hard here. It took us 4 years. 4 years. The quicker this happens, the better for the entire space. This is called healing. It's very, very natural. It's a great, great thing. It's not a bad thing, guys. It's just healing the markets. Like we have night and day. We have fires and storms. It's just a great, great period where we're going to find a lot of cleansing in the space. Don't think of it as a negative thing. Before I leave, final segment, we normally see an altcoin rally. So a lot of folks are going to tell you, this is it, guys. This is the altcoin season. I am warning you again. We're probably going to head to the SMAs again, get rejected like we did here, get rejected like we did. Just get rejected. Just be cautious and careful. Coin is heading lower. Altcoins are heading lower for the medium term. And then we're going to discuss what really happens next. What really, really happens next. That's going to be the fun part. Yeah. This is just the warm up, guys. The fun part's really coming. That's it for now. If you're tired of losing constantly again and again, keep getting trapped by M2 supplies. All of these people that are telling you to buy, but in the background, they're selling. They're dumping on you. My private members, be the 1%. Yeah. Don't be the 99% following the crowd. Please don't do that. Join our private members. Peace.